Hey traders, Todd here. Welcome to a free video update. Sorry to be so quiet. It's been so incredibly busy. We're just so focused in on the markets and providing content to our members. Sorry to be quiet, but there's so much to do in this market right now, man. It's been awesome. It's been really good. So I want to catch you up from what's going on from our perspective. Show you what we've been up to, maybe what we're looking at going forward, show you some positions, kind of give you some commentary and some color as to what is driving this market, because there's a lot of cross currents out there, and there's a lot of confusing concepts I think people are getting wrong. And yeah, it's interesting. It's really crazy market. So anyways, we're going to talk about rates driving the market. We're going to talk about briefly touch on sort of a macro report we're working on right now, which is why the market sentiment, which is very bearish, being driven by this idea that net interest payments by the government are going to be so high, it's going to sink the economy, and government spending is the only reason the market's going forward. Like, that's the theme that's driving this market lower here. We have some work to show that that's not. The markets are focused on the wrong thing. I think the realization is starting to come around to that, but that's a little bit beyond the scope. That's what's driving volatility right now. To keep it simple for this video, and just to get you in and out, because I know you guys have about a 5-minute attention span and that's it, is there's no question right now that the market is being driven by yields. Okay, so I put a tweet out yesterday, which is going to be right here. So no question right now that, the S&P in blue and the 10-year Treasury futures in black left. Now, ever since July, the two are joined at the hip. And, you have Treasuries moving higher, which means Treasury yields moving lower. Lower yields means the Fed's going to cut and the market thinks that's good. So stocks are being bought. A little bit of divergence here. I pointed out yesterday's 10-year Treasury notes make a new low. Yields, which moves opposite, make it a higher, I guess would be so if this made a lower low, yields would make a higher high. So a little bit of a warning sign to the S&P just over the last couple of days, but markets are bid here on good news out of Taiwan. And I think basically we'll go into this another conversation, but I think yields are going to start to stabilize and have a lesser impact on equities, and these correlations won't be so pronounced going forward. Okay, so your takeaway here is just watch yields. Okay, speaking of yields, and we'll come back to NVDA here, but the 10-year yield is what you want to be focusing on to keep it simple. And Alex put out a free video for us yesterday, which was great. Be sure to check that out. So we're holding 4.1 resistance here in the 10-year yield. Okay, so this is the move up from the end of December. We went sub 4, and I told our members and my investors, like, look, the market is going to not like it on the face when yields recapture, 10-year yields recapture 4%. It's going to have a sell-off. The degree of the sell-off in reaction to this remains to be seen, and we are now learning what the degree of that is once the realization that yields aren't going to continue significantly below 4, and that's exactly what's happening in the equity market is handling that quite well. So we do see yields in resistance at 4.2, and remember that correlation with Treasury futures right on top of the S&P. That means yields on the Treasuries move opposite to the stock market, particularly growth and tech. All right, so just keep that in mind. Okay. Now, we got a good boost. Bank of America came out and gave Apple a big upgrade, calls for 20% upside. And that's at a time where Taiwan comes out, beats earnings, expects revenue growth this year to be at least 20%, more than double the rate of the wider chip market. This should be good news for its customers, NVIDIA, Apple. Expects full year revenue to grow in the low to mid 20%. The world's third largest chip manufacturer is backing itself down. Okay, so this is important. Taiwan dominates the high-end manufacturing market, including 3 nano and 2 nanometer chips. Expected power generation smartphone makes chips for Apple, Qualcomm. There was a funny article right here This was back in August. Apple buys every 3 nanometer chip that Taiwan can make for next generation, right? So you're getting a double whammy here from Apple and Taiwan, which just beat earnings, okay? So let's take a look at the rotation that's happening right now. We just did a video, and as you may or may not have heard, Julius de Kempenaer is joined up with us at Trade Analysis, and we are rounding out our offering quite significantly here for members in the rotation front. So Julius and I went through and did a full report on the current sector rotation and what's happening and key sectors we're looking at. I'm going to draw your attention to a few of them, and here's just a brief look at the report that we make every week for our members. So pretty cool stuff happening. But the focus here that you want to look at is, I think, this. All right. Technology right now. Okay, so this is the RRG on the monthly, okay? The monthly technology ETF, which is here in sort of the brown, over the last couple of months, it's sort of lost its heading moving into monthly leading. And as you start losing that north-northeast trajectory, you start to lose some relative strength and momentum, okay? And that's been echoed by the sub-industries within tech, which are semis, application software, system software, and semi-materials and equipment. Okay, so the growth in tech and specifically the industries that are leading tech have begun to roll over. And you know, the sub-industries that I just mentioned on the weekly are also doing that. So here's semi-materials and equipment, a little bit of a rollover. System software, application software, those are the big guys. You know, those are like Cadence and Synopsys and Adobe and ServiceNow and Manhattan Associates. Those guys were really doing very well back here in at the end of 23, but we've since rolled over. But what has rotated in quite sharply? Look at the green one. Semis have become ripping back. And we're wondering, might it arrest the slide here on XLK technology as it's losing relative strength and momentum to the S&P. Semis are starting to move, and we are starting to see some strength in some of the software stocks. So specifically semis that we want to be looking at, okay, as we go over to the stock specific, these are the guys that are in monthly leading that we want to look at. And no surprise, you're going to have NVIDIA in there, and NVIDIA rolling over the monthly. AMD is now playing catch up to where NVIDIA was. Broadcom is also on an S trajectory. Intel is coming back, okay? So over here on the weekly, AMD, we know what's going on. Increasing velocity between these vectors, increasing rate of change or momentum, started to top out just a little bit. But this is the weekly, so we know what kind of week NVIDIA's had. Intel's doing fine, Broadcom's doing well, but look at the hook in NVIDIA. NVIDIA is making a really, really nice push, okay? So we're gonna go look at NVIDIA here in a second, but I also wanna draw your attention to hardware, and that's gonna contain Apple, which this is gonna be an even more dire situation here. The monthly RRG has done a big rotation down, pointing lower on the monthly, pointing lower on the weekly, but then, you know, we come around and we have an upgrade on Apple, and we start to like take a look at the technical position of Apple and is saying, is it that bad? Is this a case where we might be moving into technical support in Apple, where that rotation out and the lack of leadership that Apple has shown since May of 23, look at the Apple NDX ratio here, it's clear. And more so here, Apple S&P from December. But, you know, do we have this little double bottom in the 50% retracement in Apple and that upgrade, and we're starting to break above 187, is that rotation out in hardware about to end and Apple start to reaffirm? Now, there's a lot of talk about Vision Pro, and this is a much longer discussion, but you know, Apple seems to be stabilizing. Now, I want to go back to semis. That rotation in semis is interesting, particularly that NVIDIA rotation, as I'm showing you right here on the weekly. This is interesting. Okay, this is interesting. So I want to take a look at NVIDIA And I want to take a look at AMD over here on the Elliott Wave side. All right, AMD. Let's talk about this. I was in CNBC yesterday rallying. They just got a quote for me on AMD. Inside Edge Capital's Todd expects 221 in AMD. I've had this stock since $30. My average entry is about 35. And I just want to talk from an Elliott Wave point of view on AMD. Okay, real simple. Okay, coming from the 2015 lows, I see it as this is going to be a primary 1, 2, 3, 4. How long can Wave 5 last? This is just going back to classic Dow theory, guys. You should have similarities in amplitude, duration, a percent increase of your 3 primary trend waves. One, the middle wave, and the final wave. Wave 1, guys, went 865%. Wave 3 went 1,690%. The current guy is 200%. Does that make sense that you're saying this is it? Probably not. Okay, probably not. And inside of each wave, 1, 3, and 5, you need 5 smaller waves. There's your 5-wave move in 1. There's your 5-wave move in 3. And people say, well, why don't you label all this other stuff? It is labeled. Same thing. This 3 needs 5 smaller waves, which is here. I just have it hidden for cleanliness, so I can show you. So there's your 5-wave move inside of that 3, right? So the way we're looking at it, AMD is this. If you need 5 smaller waves in this orange 5, this is the largest correction that we've seen since the late 22 lows. That must be a wave 2 within the higher degree 5 of 1. Okay, so this is the fractal nature of Elliott in that I believe it should do 5 up, pull back in 2, and then we can diagonal up. We can do whatever we want here. It can have overlap, but the target remains. So the heart of my target, aside from valuation, which I'm not going to go into, and earnings projections, so on and so forth, if you take 61% the distance of 1, so 800% move, you have 61, which is a conservative fib target, 865%. Take 618 of that. That's going to be 221. Okay. On top of that, you could do an external retracement of wave 4. And this is just basic fib stuff that I've taught a bunch of times. I want to pull in the 1272. So I want to get rid of all that. Clear. You want to do the 1272. That's one of the most important extensions. It's a 222. Look at that. I mean, could you get any more perfect? And then inside of 1, let's do a little 3v1. That doesn't want to work. That's okay. Let me just do it by hand here. So wave 1 was 143%. That's going to be your minimum. That's going to be your target for wave 3, because usually 3 is as long as 1. 130, 140% gets you up to 220. So there's a lot of confluence there in AMD. Now, NVIDIA, right? And AMD is catching up to where NVIDIA is. We saw it in the relative rotation graphs, and now we're seeing it on the technicals. Now, NVIDIA, I've told you that I have this trade on in NVIDIA. Oh, Celsius is going too. I did CNBC on Celsius yesterday too. So AMD, excuse me, I keep saying AMD, NVIDIA. A long stock in NVIDIA, but I have this 550-570 call spread that I put on in the options training course that I did. Okay, so we're right up against the objective here in, I don't know why I have AMD stuck on the mind. 550-570 call spread. So we're at the short strike. We're trading 571. I'm up. You can see the profit about $8,300 on this trade. To get the max profit closer to 13,009, I need the extrinsic value to come out of the 570s, which is time, because those are the 26 Jan 26 expirations, right? So you look at the technical position down on the half-day chart of NVIDIA. The breakout's been great. We're at the 570 objective. Do we have the makings of a 5-wave completion in this form right here? Are we about to do 3, perhaps pull back in 4, another 3, 4, a little dance here, as we move into their earnings report before we ultimately move up. And then do we have a completed 5-wave move up in NVIDIA? And then are we in need of a significant correction? That is a distinct possibility. I'm more bullish than most. I think you know that. If you've been following me, we've been correct and we've made a lot of money. But, I certainly don't want to get piggish. And I'm very aware that we have a possible 5-wave move complete in the NASDAQ, in the S&P, and Amazon, and Microsoft from the late 22 lows. And we may need a correction here coming into the first half of 2024. Okay, so there's a lot going on here. Near term, I'm very bullish, but longer term, we're watching very closely, and we're getting ready on the wealth management side. We're getting ready on the research side to close out and button up all long exposure on the upside. But if we are going to go through a market realization, which I think we may go through, the degree and depth and ferocity of it is yet to be determined. And we're going to be watching very closely on that. It's a critical, very fun market environment. So I hope that helps. Sorry if feel like you're drinking from a fire hose, but that's just kind of the market we're in, and that's how you make money in here. So, all right, leave it there. Check us out at tradinganalysis.com, Inside Edge Capital Management, and I'll talk to you on the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.